Good morning, guys, and welcome to your show. Today is Friday, Friday the 12th of October, 2018. And listen, first we're going to get right into talking about Bitcoin a little bit. Let's open the charts right here, and we're looking at the Nasdaq. The Nasdaq composite over the last few days. Nasdaq is at 7501.47. And it's dropped. Now, there's a correlationship, I believe, between the Nasdaq and tech stocks and Bitcoin. And I believe there's a little bit of a divergence there between them. In other words, a slight delay between Bitcoin and but the Bitcoin is not following the Dow. It's more or less following Nasdaq. Let's take a look at Bitcoin this morning. And see what it's doing at 6201. And so with this slight divergence, I think that it's very entirely possible we could see a little bit of a rebound in Bitcoin over the next few days. Bitcoin is at 6201 right now. Now we had this waterfall drop. Now let's take a look at the Nasdaq again, and the Nasdaq had its drop. Now the Nasdaq has got a slight rebound. Okay, now this is curious. I mean, it's only a little theory of mine. Right now, I'm putting it to the test to see just exactly what's happening with this. But we did lose quite a little bit of market capital. Bitcoin's at $201 billion right now. It was at 219. So we've lost roughly 17 billion more or less of market capital in the cryptocurrencies. Bitcoin dominance at 54%. You notice when Bitcoin falls like this markedly, that the money races back to Bitcoin, raising the Bitcoin dominance. See, all the coins falling this morning, mostly. We see some really good prices on some of these coins right now. 53.56 on Litecoin. Litecoin is rebounding a little bit, though. It was lower. It's rebounded 2.15%. XRP, 42 cents. Now, that's an excellent price on XRP. Really good, really good. That's good. Now, okay. So, let's move on with the markets today, and let's take a look at the Dow Jones Industrial Average. 329 points up right now. It's a little bit of a relief, like a rally for these guys, that are into the market. They're saying to themselves, everything's fine and rosy today. Everything's fine. Let's look. What's Kramer got to say? What's Kramer got to say about all this? Kramer says, the Fed is vastly out of touch. He says, I favor one more hike. And then Yellenize and hold. You remember the last Fed Reserve Director, Yellen. So he's talking about Yellen here. He says, I favor one more rate hike. Well, I kind of said that this rate hike would be their last rate hike. And I don't think so. I think they are going to rate hike one more time. And that'll be their last rate hike. But the thing is the only reason why I think they're going to rate hike one more time is because they're really, a lot of the members of the Fed, I think, are out of touch with reality. I don't even think I think that they just go by things like the Phillips curve and stuff like that, which is a bunch of utter nonsense. And I don't think that they realize just exactly what's coming. If they did, I think that anyway, I can just laugh about it, and so he's in favor of one more rate hike. He's I don't know. I don't know what to say about all that. Anyway, let's move on and let's take a look at we did the Dow Jones. It's up 321 points. And let's take a look at oil right now. Oil is bouncing up and down like a rubber ball here. Today it's up 71.52. Uh, it's up 0.55%. It's up 55 cents. It's up 0.77% to be precise today. But it's been going up and down like an Indian rubber ball the last few days. It doesn't know where it wants to go right now. That's because the markets are in a little bit of turmoil, or a lot of turmoil. But things are recovering right now, and things are going to smooth out a little bit. That's what I'm expecting. The recovery has started a little bit here, and we're up 308 points, and I expected this bit of a bounce after this initial fall. Well, I showed you guys the charts last night, and this is all reliant. But I got a bad sign this morning. Honest to God, I got a bad sign this morning. Take a look at this in the bond market. I didn't expect the bonds to start to rebound this fast, I expected them to stay down during this recovery so that we could go into maybe a month of the markets being settled, and everybody could start to feel good again. But the bonds are rising awful fast. Look at this, which could be an indicator that this ain't. If the bonds rise too fast, this could be an indicator it is not quite over yet. This first waterfall, like we could recover a little bit and slope right back down again. I mean, if these bonds rise too fast, we got to keep our eye on this because look, they're rising. I didn't expect them to rise this fast. I expected them to be pushed down, smushed down, and stay down for about a month. And look, the U.S. 10-year is rising almost, 3.5 basis points today alone. This is a bad sign, really bad sign right here that these bond yields are rising so fast again after they were smushed down. So the U.S. 10-year has only been smushed down to 3.165. We're going to have to keep our eye tightly on this. This is the key to knowing when the stock market's going to slide again. Is when these bond yields go whooshing past 3.25 next time. Like last time, they went up and touched 3.25, and then they backed away. This time, I believe they're going to go whoosh right on by 3.25, and then we're going to get in big trouble, because I think what's coming in a little ways out, I'm not sure how far out it is. It might be a month. I don't know. It might be 2 weeks, or it could be a month and a half. Once the bond yields on the U.S. 10-year go whooshing past 3.25, what we're headed toward is Niagara Falls. That's what we're headed toward in all the markets. It's going to be the most terrifying event ever, because it's going to be a repeat of the Great Depression. And of course, the central banks are all going to intervene and stop it at a certain point. They're going to have to. Or, I mean, it would get so bad, everyone would die. Quite seriously, it would get that bad if the central banks don't stop it. In stopping it, they're going to create the hyperinflation that we've all been waiting for years. And they're also going to create an economic recovery. So they're going to be hailed as heroes when the economic recovery they create starts. But that economic recovery is what's going to trigger the hyperinflation. And ultimately, the hyperinflation is going to be a more long-lived event than this depression that's coming. This depression that's coming is not going to last very long, because the central banks are going to step in and stop it. But they're not going to be able to stop the hyperinflation. And the hyperinflation is going to be something that's going to last a while. It's going to last as long as the people will cling to the fiat currencies. how crazy will it get? Well, as long as they cling to the fiat currencies and still use them in trade, and they will, even when they're hyperinflating, they'll continue to use them. It's unbelievable how long they'll continue to use them. They'll continue to use them until they're almost completely 100% worthless, like the US dollar is almost completely 100% worthless. They will continue to use them. So trying to estimate how high gold will go in a hyperinflation, it's just a silly thing to do because gold's going to become priceless compared to dollars ultimately, because they're going to cling to those dollars when they need $100,000 to buy an egg, one egg. They will still be using dollars. And that's what's going to make the hyperinflation last quite a long time, because they're going to cling around the world because they're going to see there's no, that the alternatives, they really, it's amazing how long people will actually avoid the alternatives to the dollar. A lot of the, I'm talking about the mass population out there, and still cling to using the dollar when the dollar's going down in a hyperinflation. Most people are not the smart ones are already on to this. They're already out there buying alternatives to the dollar, like Bitcoin and Litecoin and gold and silver, and they're already storing it away from them for themselves. These are the intelligent people. But the masses out there, it's almost like they have a hive mind, and they will never do it. They'll just stick with the dollar right to the bitter end until they're completely bankrupt, until they don't have a penny, two pennies to rub together. And instead of being in Hoover camps, like they used to have Hooverville, where they used to have all these people, masses of people that don't have any money, they're living out of a tent, you know? Instead of being in Hooverville, those people are going to be in new camps called Trumpville. You know, I mean, it's the same deal all over again. It's just like the Great Depression, what's coming. Except it's going to be a hyperinflationary depression, something similar to what Venezuela is going through right now. And we're going to see an awful lot of things in this time. You're going to see, you'll be walking down the street, you know, to go and get something, buy some groceries or something. And you're going to have to step over people that are going to be on the sidewalk, right in America. You're going to have to step over people that are going to be in the sidewalk, all bundled up in blankets, laying there, and that's their home. They're not even in a tent. You're going to see this. And they're going to be all with little cups. Give me a coin while you walk by. And the reason why is because they're not going to buy into alternatives to the dollar. They're going to stay with their precious dollar until the dollar's worthless. And they're going to be absolutely in a state of poverty. And there's going to be so many of these people that you might feel sorry for them, but you're not going to be able to help them because there's going to be thousands of them. Quite literally. Camps everywhere. FEMA camps are going to be filling up. And this is what we're headed toward. This is an economy. The economy is moving us in this direction. And it's doing it fast. This is going to be a fast transition. Anyway, let's take a look at the US dollar index today. 95.37. So it's holding in around 90 and 95. The mark for this dollar, by the way, where the emerging market economies start to get a little bit more trouble again, is 97 on the US dollar index. So now let's take a look. Well, we've taken a look at all the charts today, all the indices. Thank you guys for listening. I know I rambled on a little bit about the hyperinflation that's coming. It is going to be a pitiful situation. There's going to be people that make out good and people that make out bad. A friend of mine, years ago, he's passed away now. He lived through the Great Depression. And in fact, he was an adult man during the Great Depression. And it's funny what happened to him. Maybe I'll just tell you the story real quick. I mean, because I know I'm running a little bit over time, but I'll tell you the story. His name was George, you know. And during the Great Depression, it's hard to get a job. Everybody wanted a job. There was hardly any jobs out there. People were losing their jobs. And so people were fighting for jobs. And so this day there was a big new opportunity to get a job, you know. And so these guys were all in there early in the morning, and they were waiting out front, you know. And there was a lineup. I mean, he told me the lineup was probably more than 100 meters long. Maybe it was stretched way down the street, he said, and around the block, the line. All these guys, healthy young men, waiting at the front door of the business to go in and be interviewed, you know. So George went in there, and he was a healthy young man, too, you know, and everything, and he was looking for a job. And he seen this big, long lineup, and he got a little bit discouraged, you know. He said, well, he didn't want to wait behind them all because he knew he'd never get the job because there's like 300 guys or 400 guys there in front of him, all waiting to be interviewed. And the interviewer, for crying out loud, I mean, after that many guys, the interviewer would get tired. He would have already picked somebody anyway. And George was smart. George was smart. He was the kind of people like the people who watch my channel who are getting ahead of everybody else, you know. You know what he did? He forgot all those guys are out there waiting for the door to open because the business to open to be interviewed. He went around the back of the building, you know, and there was a back door there, and he walked right in the back door. And guess who was there? Well, the manager or whatever that was going to do the interviews. So he said, what are you doing here to George? And George says, I'm here for the job. He says, oh, you are. You know, George walked in through the back door. He wasn't supposed to go in through the back door, but George walked in through the back door. He says, I'm here for the job. And he says, well, do you have any qualifications? And George told him what he's able to do and the things he worked at before and stuff. And he says to George, well, you're hired. Now, what George told me was that was a great little job. He was doing dressings for windows, like window dressings, you know. He was going in, he was setting up mannequins and stuff and making little cardboard cutouts and stuff and putting them in the window for the store, you know. And he said he earned like, I think he said he earned $40 a week, which he said in the Great Depression was fantastic money. He said, George said, I lived like a king for like, I think it was like $15 a week, he said. And the rest of the money, he went out and he got Morgan silver dollars. And he'd put them in a sock under his bed, you know. So every week he kept collecting these Morgan silver dollars. And he put them away. And so George was smart. And George got ahead of everybody else, you know. And he said, he said, that's where I made my money, he said, was during the Great Depression. He said, I made out like a bandit during the Great Depression. I did wonderfully well during the Great Depression because he was one of the few that had a really good job. This is the way it's going to be, you know, in life. This is the way it is. And all these people who don't have nothing and everything else, they're having the same opportunity that you guys got. But they're following the system too much. They're listening to Kramer. And, I mean, this whole thing is going to be dependent upon people being free thinkers and not thinking inside the box. Okay, listen, thank you guys for listening. Like and subscribe, and we'll catch you in the next show. Bye-bye, guys.